Hello everyone, welcome to the market opening bell for Friday, August 1st, your 10-minute guide to the stock market. Due to weaker than expected China July official PMI data and a soft Hong Kong dollar, Hong Kong stocks fell. The Hang Seng Index opened 194 points lower, with losses narrowing to 176 points at 25,000 points in the morning session. However, the decline widened in the afternoon, dropping as much as 432 points to a low of 24,744 points. The index closed down 403 points or 1.6% at 24,773 points. The Hang Seng China Enterprises Index fell 155 points or 1.7% to 8,882 points, while the Hang Seng Tech Index dropped 37 points or 0.7% to 5,453 points. Total market turnover was 320.6 billion Hong Kong dollars. Southbound trading turnover reached $170.4 billion. For July, the Hang Seng Index rose 2.9%, the X-share Index gained 2.4%, and the Tech Index increased 2.8%. In terms of individual stock performance, Unisound, Guotai Junan International, and East Buy surged 95.85%, 86.59%, and 85.08% respectively, topping the July gainers list. Meanwhile, Laobu Gold, Chow Tai Fook, and Qifu Technology fell 29.71%, 23.22%, and 21.72% respectively, leading the losers. Southbound funds net bought 13.126 billion Hong Kong dollars worth of Hong Kong stocks on Thursday, including net purchases tracker fund totaling $2.405 billion. Hang Seng China Enterprises ETF 1.782 billion. Meituan 1.398 billion. Kuaishou 1.383 billion. Alibaba 1.043 billion. CSOP Hang Seng Tech ETF 973 million. Xiaomi Group 441 million. Tencent 433 million. SMIC 221 million. Net sales Laopu Gold 278 million. CSPC Pharmaceutical 113 million. According to statistics, southbound funds have net bought Tencent for 6 consecutive days, totaling $2.705 billion. Alibaba for 5 consecutive days, totaling $2.673 billion. And Xiaomi for 5 consecutive days, totaling $3.036 billion. Technically, the Hang Seng Index fell below 25,000 points, filling the upward gap from July 21st between 24,826 and 24,845 points. It is currently holding above the 20-day moving average at 24,720 points. If the 20-day moving average is breached, the next support levels are at 24,500 points and the 50-day moving average around 24,180 points. Another upward gap from June 24th, spanning 144 points between 23,689 and 23,833, lies further below. Mainland China's 3 major indexes fell over 1%, with trading volume continuing to rise. The Shanghai Composite Index closed at 3,573 points, down 42 points or 1.2%. The Shenzhen Component Index closed at 11,009 points, down 194 points or 1.7%. The Chinex Index fell 39 points or 1.7% to 2,328 points. Combined turnover in Shanghai and Shenzhen reached 1.9359 trillion yuan, up 91.7 billion yuan from the previous day. For July, the Shanghai Composite rose 3.7%, the Shenzhen Component gained 5.2%, and the Chinex surged 8.3%. The renminbi central parity rate was set at 7.1494 against the US dollar, down 53 pips from the previous day. The National Bureau of Statistics reported that China's July manufacturing PMI was 49.3, below market expectations of staying flat, down 0.4 points from June. This marked the fourth consecutive month in contraction territory and hit the three-month low since April, indicating a decline in manufacturing activity. The non-manufacturing business activity index fell to 50.1, down 0.4 points from June, slightly below the expected 50.2. The composite PMI output index dropped to 50.2, down 0.5 points down from June, but still above the critical threshold, suggesting overall enterprise production and operations remained in expansion. In the Hong Kong market, Kuaishou bucked the trend, rising nearly 6.4% to close at 77 Hong Kong dollars. Reports noted that Kuaishou's Keling AI, after being featured on CCTV's news broadcast, appeared on Focus Interview. Keling AI products have seen rapid user growth in markets like North America, Europe, and East Asia, with global cumulative users exceeding 45 million. According to earlier public disclosures, Keling announced 22 million global users in April, doubling in just 3 months. On the earnings front, Standard Chartered reported a 25.5% year-on-year increase in first half statutory pre-tax profit to $4.383 billion, beating expectations. Second quarter statutory pre-tax profit was $2.28 billion, up 44% year-on-year, or 48% on a constant currency basis, also surpassing forecasts. Credit impairments rose 51% year-on-year to $120 million, lower than the expected $250 million, with a second quarter loan loss rate of 12 basis points, flat year-on-year. The interim ordinary dividend increased 37% to 12.3 US cents per share. The group announced an additional $1.3 billion share buyback. Standard Chartered slightly raised its revenue guidance in the second quarter results, stating that, excluding significant items, 2025 revenue growth on a constant currency basis is expected to be near the lower end of the 5 to 7% range. Hong Kong Telecommunications reported their first half results for the period ending June, with revenue of 17.322 billion Hong Kong dollars, up 3.9% year-on-year. Net profit rose 4% to $2.07 billion, with earnings per share at 27.32 cents. An interim dividend of 33.8 cents was declared, compared to 32.92 cents the previous year. EBITDA grew over 3% to $6.38 billion, while adjusted free cash flow increased 3% to $2.562 billion, benefiting from higher roaming revenue and increased 5G plan fees. The ARPU for postpaid customers rose 1% to $193 in June, up from $192 the previous year. As of June, over 54% of mobile postpaid customers were on 5G plans, totaling 1.894 million, a 21% year-on-year increase. Companies announcing results today include Xinyi Solar, Xinyi Glass, Xinyi Energy, PCCW, and Far East Horizon. US stocks opened higher but closed lower. The S&P 500 and Nasdaq indexes hit record highs at the opening, but reversed in late trading. The S&P 500 closed down 23 points or 0.4% at 6,339 points, marking its third consecutive trading day of declines. The Nasdaq closed slightly lower by 7 points at 21,122 points. The Dow Jones Industrial Average saw the largest drop, falling 330 points or 0.7% to 44,130 points. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 49 points or 0.7% at close, ending at 7,462 points. Microsoft's fourth quarter revenue exceeded expectations, with the stock rising as much as 8% intraday, but closing up 4% at $533.5, failing to break the $4 trillion market cap threshold. Meta's quarterly results beat expectations with optimistic profit forecasts, driving the stock up 11.3% to $773.44. ARM's next quarter profit guidance disappointed, leading to a 13.4% drop in stock price to $141.38. Qualcomm's last quarter's profit exceeded expectations, but the stock fell 7.7% to $146.76. President Trump sent letters to 17 major pharmaceutical companies, including Eli Lilly, Novo Nordisk, and Pfizer, demanding that U.S. drug prices be reduced to match or fall below certain foreign markets. Trump proposed that the U.S. government could assist in raising drug prices overseas in exchange for lower U.S. prices, provided all additional revenue from overseas price increases is repatriated to offset domestic drug costs. This move has raised concerns about potential pressure on the profit structures and global pricing strategies of pharmaceutical giants. Stock prices closed at $740.07 for Eli Lilly, $47.07 for Novo Nordisk, and $23.29 for Pfizer. Apple's third quarter results ending June 28 showed revenue up nearly 10% year-on-year to $94.036 billion, surpassing expectations of $89.53 billion, marking the largest quarterly growth since 2022. iPhone sales rose 13% to $44.858 billion, exceeding forecasts of $40.2 billion. Mac revenue grew the fastest, up nearly 15% to $8.05 billion, also beating expectations. iPad revenue was $6.58 billion, below the expected $7.24 billion. By region, America's revenue rose 9% to $41.198 billion. Europe increased 10% to $24 billion, and Greater China returned to growth, up 4% to $15.37 billion. Net profit grew 9% to $23.434 billion, with earnings per share at $1.57, above the expected $1.43. The stock rose 3% after hours from a close of $207.57. Amazon's second quarter earnings per share were $1.68, beating expectations of $1.33. Revenue growth accelerated, up 13% year-on-year to $167.7 billion, surpassing forecasts of $162.1 billion. AWS sales were $30.87 billion, in line with expectations, while advertising revenue reached $15.7 billion, exceeding the expected $14.9 billion. Online store revenue rose 11% to $61.5 billion, topping forecasts of $59 billion. Third quarter revenue is expected to be between $174 billion and $179.5 billion, implying 10% to 13% year-on-year growth above expectations. However, the company's profit guidance was weaker, projecting third quarter operating profits between $15.5 billion and $20.5 billion, below the expected $19.5 billion. The stock fell over 5% after hours from a close of $234.11. The Federal Reserve's preferred inflation gauge, the U.S. Personal Consumption Expenditure (PCE) price index, rose 0.3% month-on-month in June, meeting expectations and marking the largest increase in 4 months, following a revised 0.2% gain in May. The core PCE index, the strongest, also rose 0.3%, the strongest monthly gain in 4 months. Year-on-year, overall PCE inflation accelerated for the second consecutive month to 2.6% in June, up from a revised 2.4% in May and above the expected 2.5%. Core PCE inflation remained at 2.8%, with May's figure revised upward from 2.7% to 2.8%. According to Challenger, Gray and Christmas Inc., U.S. employers announced 62,075 jobs cuts in July, a 29% increase from June's 47,999 and a 140% surge year-on-year. July's layoffs significantly exceeded the post-pandemic monthly average. Year-to-date, companies have announced 806,400 job cuts, the highest since 2020's 1.8477 million. The Dodge effect remains a key driver of the increase in layoffs in 2025. Our stock pick today is Medtide, stock code 3880. Medtide primarily focuses on providing significant contract research, development, and manufacturing organization (CRDMO) services, specializing in synthetic peptide production and offering end-to-end services from early discovery, preclinical research, and clinical development to commercial production. Based on 2023 sales revenue, the group is the world's third-largest peptide-focused CRDMO, with a market share of 1.5%. The group has established an extensive project pipeline with 1,217 ongoing CRO projects and 332 ongoing CDMO projects as of December 31st, 2024. The group's main services include: 1. CRO services, specially peptide new chemical entity (NCE) discovery and synthesis, and 2. CDMO services, including peptide chemistry, manufacturing and controls (CMC) development, and commercial production. The group primarily focuses on providing active pharmaceutical ingredients (APIs) to clients rather than finished drugs. Clients combine the APIs with excipients to create the final dosage form, determining the appropriate dosage form, delivery route, and formulation for use in clinical trials or commercial sales. The group has established stable customer relationships and service coverage in over 50 countries, including major markets such as China, the United States, Japan, Europe, South Korea, and Australia. According to Frost & Sullivan, the global peptide therapeutics market grew from $60.7 billion in 2018 to $89.5 billion in 2023, with a compound annual growth rate of 8.1%, and is projected to reach $261.2 billion by 2032, with a CAGR of 12.6%. Approximately 70% of the global peptide therapeutics market, driven by pharmaceutical and biotech companies, outsources clinical development and production to third-party service providers, significantly higher than the 30% to 40% for biologics. This reliance on third-party providers has led to rapid growth in the global peptide CRDMO market, which increased from $1.6 billion in 2018 to $3.1 billion in 2023, with a CAGR of 14.8%, and is expected to grow further to $18.8 billion by 2032, with a CAGR of 22%. Currently, 76 non-insulin peptide drugs have received regulatory approval globally. Among them, GLP-1 has become a major driver of the rapid growth in the global peptide therapeutics market. The global GLP-1 market grew from $9.3 billion in 2018 to $38.9 billion in 2023, with a CAGR of 33.2%, and is projected to reach $129.9 billion by 2032, with a CAGR of 14.3%. If semaglutide's patents in China and the United States expire in 2026 and 2032 respectively, it could lead to an increase in generics potentially driving higher demand for APIs as well as CRO and CDMO services for the discovery and development of more advanced NCEs. Recommendation: buy at 34.5 Hong Kong dollars, target $37.5, stop loss at $33. I do not hold the aforementioned stock.